Hi all, Joshua Stega here from etfadvisor.com.au, and today I'll do my usual weekly rundown of the Aussie ETF market and what investors should be looking at for the week ahead. This week I'm going to do the good, the bad and the ugly, and markets are really quite mixed at the moment, so we've got really mixed bag across the board, and I'm just going to comment on a few different sectors and themes and just show you what's moving and what isn't, and what we'll be looking at for, making a decision as to how to play the market going forward. But we'll start with the ugly, and the ugly at the moment would have to be crypto. So obviously, crypto had been, so this is a monthly chart of Bitcoin, it had been a big performer, but just basically 2 really bad months. And we had a kind of line in the sand here, and it's kind of broken that this week. It looks pretty nasty at the moment and certainly needs to find some support here, but it may be an indication of kind of what's happening in the broader market, broader economy, signs that liquidity is a bit tight out there, and that's perhaps something that the market's sensing and kind of waiting for the Federal Reserve to go from, say, QT to back to an easing cycle in terms of just adding some liquidity back into the market. So that's, Bitcoin's been challenging, Ethereum's been challenging, and basically wiped out a good part of the investment returns for this year. So you can just see we have those lines in the sand, and they're just kind of continuously broken, and that's pretty much the story at the moment. If these markets aren't holding lows and they're breaking through it, I mean, you just don't want to be there. And that's kind of what we've been saying. We've got lines in the sand now for quite a few different markets, from the US all the way through to Australia and resources in Asia. So that's the thing. If they break, just get out. You don't want to be there until, you get some buying at the lows, and then it starts making higher lows. So at the moment, that's really nasty. Crypto as well. So crypto is an ETF in Australia that basically, holds companies involved in the crypto space. And that had been doing exceptionally well because it had exposure to, these hyperscalers or basically the Bitcoin miners, which all of a sudden became very in vogue for, AI companies who are looking for that kind of computing power, and those data centers and Bitcoin miners that are located close to energy sources and that type of thing. So what's needed for Bitcoin mining was also looked on by AI companies as an easy way to kind of get, those computer powers and the data centers and the energy as well. So that's really unwound over the last week. So you can see a really bad week, and pretty significant pullback from the highs there. Down 30% in just this month. So that'll wipe out a big part of the return so far this year. So that's probably the really ugly sector at the moment. And certainly in terms of, it gives us a guide as well, something to watch. Where does that buying eventually come in? At the moment, that looks really bad. And as I said, for Bitcoin and Ethereum, we want to see, a low put in at some point, and start to see that action where you start to make higher lows. But at the moment, it's just no man's land. And that's a very risk-off kind of environment now for the market, because typically, when everything's bubbling away and everything's quite strong, Bitcoin have been doing quite well. And you've got to remember also back to the tariff correction that Bitcoin was one of the first assets. So, here's your tariff correction. Bitcoin was the first assets to move out into new highs, and did that really quickly. So is this, a forward-looking guide of what's going to happen with the market? Who knows? But that's certainly not a good sign. So that's my ugly at the moment in terms of the market, but it's certainly something worth watching just to see where those lows get put in and where support comes in. But certainly if they continue to cascade lower, you definitely don't want to be there now. You just want to wait for that low and then start making higher lows, and then you can consider how that kind of chart pattern looks. But I would have thought buying was going to come back in here, but it just got lower and lower. So a big avoid at the moment, but something we're watching really closely just for a change in sentiment. and so that's covering off on the ugly. Now, in terms of the bad, I'd probably say, that's kind of the US market at the moment, and it has felt like, really, well, and parts of our market. So let's start with ATech actually in Australia, and this is, actually really quite bad, and this is now wiped out. So this is ATech, our BetaShares Australian Technology ETF, and that's pretty much wiped out this year's gains. I think it's negative now for the year. So where's the start of the year? Back here, so it's negative for the year, and at one stage was one of the top performers. So really quite incredible change, and it did so in a really quick fashion. So from those kind of highs, you're off 20%, almost 20%. That's a bear market correction for that sector. So very significant. But as it stands at the moment, I just this is something we've been talking about to subscribers. There's your line in the sand. If it breaks that, it's going to cascade really quickly, and that's exactly what's happened. There's, as soon as it starts breaking that base, and that's exactly what it did. It held it, came up, hit the resistance, broke it, and then boom, just cascaded straight down. So you're certainly not going to pick your tops and the bottoms, but where if it's going to break from there, there's 14%. In 18 days. So it just happens really quickly now. Corrections happen really quickly in our market. So in terms of, if that happens now to financials, so this is the financials index in Australia. OZF is one of the ways to play it. So it's an ETF covering banks, and pretty much $30 for me is a key level. It's really looking quite weak, and has had a really weak past 7 days or 5 days of trading. So through that $30, it starts to look really worrying. You might see a bounce back into moving averages, and then once again, if it breaks down through that $30, I think it's going to cascade lower quite quickly as well. So that's the bad. It's not ugly at this stage. I mean, ATEC's quite ugly, but this is looking quite bad at the moment. So definitely worth watching and just getting a gauge on how that's playing out. What I'd also say is a little bit bad at the moment is the US market. Like, once again, we kind of spoke last week and we said, look, there's your high. Everyone's been really bearish, basically over, certainly feels like the last few weeks. Just, worrying about all sorts of things in the economy, AI, what's going on in the US and global economy. And it's pretty amazing. The market's not that far from highs, but everyone had just got super bearish. But last Friday, we had an upside reversal, saved at that 50-day moving average again. And then, things looking better Monday, Tuesday, Wednesday, Thursday, and again, back to Friday. So last Friday, another upside reversal. Positive sign. You can see there's a lot of distribution there, and we're starting to see a bit more buying, but once again, we've got a very clear line in the sand. Here, just in terms of held the 20-day moving average, held the 50-day moving average, held the 50-day moving average, 50-day moving average. If it breaks through here, I think again, cascades really quickly and has the potential to be quite bad. Or, it just shakes out and maybe we do get that end of year rally. But at the moment, I think we've got NVIDIA earnings this week. That's going to make or break, I think, the AI trade. So we'll see how that all plays out. That'll be Wednesday in the US, so Thursday morning our time. So that's going to be really interesting. Let's have a look at the NASDAQ. Similar kind of thing. It's just been holding that 50-day moving average. So there's your touch of 50-day moving average, 50-day moving average, 50-day moving average, 50-day moving average. And again on Friday, 50-day moving average opened there, went down, found some buying, saved on the 50-day moving average again. So once again, we have a really clear line in the sand. If that breaks and spends 2 days under that 50-day moving average, which it hasn't done yet, I'd say that's going to cascade really quickly. So we've got to be really careful here, be very vigilant, and that's as I said, that's the bad at the moment. It's not looking too good. We'll have a look at a couple of other spaces in the US. So this is the equal weighted S&P 500, and you can see this doesn't then have the big exposures to, it's more an equal weight across the 500 stocks within the S&P 500, allocates them more evenly, as opposed to a market weighting where your biggest company get the most weighting, meaning that your big tech stocks are going to be like 30-40% of the index. So here it's equal weighted, and you can see once again you've got a line in the sand. It looks a little bit better on Friday, but yeah, it's just not getting a whole lot of buying. So once again, if it breaks through here, I think it can cascade really quickly. So we've got to be really careful. At the moment, it looks like a base, looks a little bit better than the index, but it is kind of living under these moving averages now, which is quite concerning. So once again, that's the bad. We'll have a look at the Russell as well. So this is the small caps in the US, the small cap index, and you can see, it was extended. We had that V-shaped rally. So this is the monthly chart down the bottom. You can see we've been talking about that for weeks with subscribers. V-shaped rally. It's not going to just keep going up. It needs time to get through this previous supply. So that's a nice V-shaped rally. You had 1, 2, 3, 4, 5, 6 months straight up. I mean, it's not going to keep going and going and going. It needs time to rest. We've had 1 month down. Within the scheme of things, that's nothing, and actually looks quite good. So we'll just see how that plays out. But once again, it was kind of saved there. We have broken the 50-day moving average. It's now living under those moving averages. The shorter term moving average is starting to trend down. So we want to see buying come in pretty soon, and you want to see that, right side kind of build out. But at the moment, yeah, there's a bit of a line in the sand there, and if that breaks, I think that cascades pretty quickly as well. So really got to be careful. I mean, the monthly chart looks a lot better. This daily chart looks concerning. As I said, living under those moving averages is not a good sign. So that's another thing to really watch closely. The bad, and it could turn to ugly if we cross those, those key moving averages, those lines in the sand. So we've seen what can happen with the ugly, which is crypto, also ATech to an extent, but certainly the US market, and then you've got the Aussie market as well. And we're pretty much in that position here now as well, that we had, there's your 50-day moving average that's been holding. There's a 50-day moving average, broke the 50-day moving average. We've now got all these moving averages starting to trend down, and we've kind of broken that support. We broke the 50-day. We're having a bit of a shakeout moment here. Does it go lower? Well, it really depends on what resources do from here, because they're actually holding up quite well. So that's a big thing we're waiting on now. So this is kind of now moving into the good. The resources actually look quite good, and this, in the scheme of things, this on the monthly chart, they haven't had much of a run this year, even though they've, from lows, they're one of the top performing sectors. But just in terms of the bigger picture, it's not like they're at new all-time highs or anything like that, and certainly the big cap stocks haven't run in the materials and resources space. So for me, it bounced off the 50-day moving average, which is a good sign, but then it's straight back up. So it just needs to spend more time here, and we certainly don't want to see this cascade and go lower. And then all bets are off. Financials, we've got ATech in Australia week. If we have financials breaking down, we have resources breaking down, I think, we're in real strife. But this actually looks quite good at the moment, so a bit more time here would be really positive. Just in terms of, obviously, gold had a bit of a pop this week. We still personally just think it needs more time. It's been a stellar run. It just wanted to shoot back up, but it's just a bit too short. It just needs more time to consolidate and shake around. So silver is a prime example of that. It just tried to go too fast. That's a nice buy point. Boom, it's straight into previous highs. It's too quick. It's like that resources in the small caps in the US just needs more time. Particularly after a run like that, there's just going to be sellers around. So that's somewhat linked to the resources space. But in terms of what has performed, we've got kind of the commodities, broader commodities. So this is one of the really interesting setups at the moment in Australia, and you can see this is BECOM, which is a broad commodities ETF, so includes energy and soft commodities. So not pressure. It's got obviously the precious metals, which have moved first, but also has exposure to, you know, agricultural commodities like corn, wheat, so the kind of the soft commodities, and also energy exposure. And this is looking really constructive. That's a really constructive weekly base, trying to push out to new all-time highs. You can see how tight that's got there. That's been a key idea and has now been introduced to the model portfolio. So that's the good. It looks quite good. We'll see how that plays out this week. And then also we've got Asia. So that actually looks quite good. We've said that Japan was extended and you know, had that kind of out of the base, has had a good run. It's kind of had 3 pushes now against the moving averages. So one touch there, 2 touch there, 3rd push needs a bit of base and consolidation. So that's just going to play out now for a while. And same with South Korea, much the same. You know, there's your base, has had the 3 touches. So sorry, 2 touches. So had kind of 1 touch, 2 touch, 3rd push. Now needs a base. So they're kind of avoids at the moment. They need to settle in. But then you've got, for example, what is looking good but just needs more time is India. So this one has been, I don't know what's happened there with the screen. Let me just refresh that. India is actually looking quite good at the moment. So let's have a look at the Nifty. And, you know, that had been quite disappointing. Just in terms, it had been the best performer out of COVID, just in terms of global markets. Absolutely stellar run. Eventually that comes to an end, and that was kind of September last year. It's put in a really nice base there. I mean, look at that on the monthly. That's just looking really constructive. So now it's just a matter of time. If we zoom out here on the daily, you can kind of get a feel for where that previous high is and where that resistance is. So it's kind of working through that, and that actually looks quite constructive. It's just a matter of when is that going to play out and trying to attack through that previous high. Is it going to be December, or is it going to be a 2026 story? But in terms of excitement of a setup, I think India looks really good, and a catalyst for that is going to be a deal, tariff deals with the US. So for me, that's good. That looks really exciting. It's just a matter of time. And same with Hong Kong. So once again, we've got down here on the monthly chart, and you can see it's definitely put in a bottom. So the bottom's there, and it's just rounding out, and it wants to kind of attack through that previous high. So we've had supply there going back to kind of, what's that, July 2021. And it's just chipping through that. So you've kind of had 3 months here now. Over here, we've kind of got 1, 2, 3, maybe 4 months, 4 or 5 months. I mean, that's the thing. Does this need another month here just to build the energy to make the move? But at the moment, that looks really constructive. That's a nice base. This is starting to shape up. I think it went a bit hard here. It's pulled back in. So we'll just see how that plays out. Does it need another week? Does it need another month? That's the question, but I think that looks really constructive. So that's Hong Kong. And China's much the same. China A50, really nice base. So this is a monthly chart down the bottom. That looks really nice. Good shape, nice right side, plenty of buying through here. And it's just a matter of how much time it needs to get through that supply before it can make another run. So you can kind of see that was the additional tariff notification. So this is where you had the additional tariff news that the US was going to put more tariffs on China because of the rare earth issues. That kind of recovered from there pretty quickly. Now it's just taking its time. So that's the thing. Does it need another week? Does it need another month? Is it going to be a 2026 story? But overall, that looks really constructive. So I put that in the good camp. We have a look at ECNS. This is small cap, China small caps in. We don't have this exposure in Australia, but it's something that I watch. Once again, that's a really nice base. We knew it was going to come up against this weekly resistance or monthly resistance in this regard. And that's exactly what's happened here. It's had that pullback, and now it's just kind of, you know, it just needs the time, and it needs to kind of start popping up through here. So when's that? Another week, another month, is it 2026? I don't know, but at the moment it looks pretty good, and that's something that I'm watching. So There are some negatives. Obviously, we're talking about crypto. Some of these things, if they break, in the same vein, this could also turn ugly. This is kind of a line in the sand. If it really starts to start belting through here, everything could turn ugly really quickly. But at the moment, this looks good. India looks good. Commodities look good. Resources look good. So at the moment, we want to kind of focus on the positives, but be watching the ugly. If we start to get a low in crypto, that's going to be a good sign. If we start to get higher lows, that's a really good sign. If we see the S&P 500 and the NASDAQ respond well to, say, NVIDIA's earnings this week, that could be a game changer. So there's a lot of moving parts at the moment. There's not necessarily the bulls are in charge or the bears, and it's just a bit of a waiting game at the moment. So really mixed bag, but that gives you an idea of what I'm looking at. There's some still really good opportunities. There's definite rotation in the market. I mean, look at one of the recent additions to our model portfolio was health, global healthcare leaders. So there's definitely rotation. So this had been a really bad performer. So it was kind of like mid-year. It was looking really, the whole healthcare sector just was not performing. But we've got some real buying in there now, and that outperformed last week. So there's your kind of base. We kind of identified it here, had a really good week, so really good outperformance. Will that continue? Who knows? But, that's certainly good. Some rotation in the market's a good sign. So there are things happening under the surface. Bigger picture, I'm still very cautious, want to hold a lot of cash, and just want to see how things play out here. But it is certainly a case of the good, the bad, and the ugly at the moment. Thanks again for your time, and once again, remember to follow the trend.